Hello, I'm John Cunningham, and welcome to another episode of the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Today's show features interviews with executives of two public companies. First up, American Resources, stock symbol AREC on the NASDAQ. American Resources is a next-generation supplier of raw materials to the new infrastructure market. It has assembled a large portfolio of met carbon assets serving the steel industry and has secured the rights to advanced technology that could revolutionize the market for rare earth elements, critical to the world's technology infrastructure. Learn more later in the show. Next up is Graphex Group Limited, stock symbol GRFX on the New York Stock Exchange American. Graphex is a global leader in midstream processing of specialized natural graphite used for electric vehicle lithium-ion batteries. We'll learn about their strategy to expand operations in support of energy transition and electrification efforts worldwide when we speak with Graphex President John DeMeo later in the show. Now, before we get to our first interview, our quote of the week. It comes from the book Small Stocks, Big Money. If you want to invest in the microcap space, buy companies, not stocks. If you buy stocks, the daily fluctuations and lack of liquidity will drive you crazy. These quotes come from Byron Roth, CEO of Roth Capital, featured in Chapter 7 of Small Stocks, Big Money. This is a book of exclusive interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon today for just $18. Now let's get started with our first interview today with American Resources Corp.
Hi, today we have Mark Jensen, CEO of American Resources. Mark, thanks for being with us today.
Thanks, Greg. Thanks for having me on.
American Resources is a next-generation supplier of high-quality raw materials to the new infrastructure market. Mark, let's start with an overview of your expanding operations.
Yeah, American Resources is a company we started in 2015. We have three divisions. The American Carbon Division, which is our mining division for the steel industry. We have ReElement Technologies, which is our refining platform, where we can refine end-of-life batteries or lithium ores back to battery-grade materials, as well as end-of-life magnets for the rare earth elements. We're one of the few producers in the U.S. that's operating today at commercial scale, as well as our American Metals business line, where we recycle ferrous metals as well as shred battery materials and magnet materials for pre-processing for ReElement.
Let's turn to your business model, Mark. How does American Resources make money?
Yeah, so today we make money from mining and selling the carbon for the steel industry, but starting in the second quarter and going into the third quarter, we'll be rapidly expanding our production of battery-grade materials, producing lithium at a 99.9% purity or higher, as well as magnet material that we recycle from end-of-life magnets and motors for the wind industry, as well as for the OEM, the auto industry, to produce those rare earth elements that we'll be selling back to our customers. So we'll be rapidly scaling, which will be the predominant revenue stream in the future.
Mark, your ReElement Technologies division is establishing itself as a world leader in innovative critical mineral refining technology. Talk to us about the critical and rare earth elements you are refining and the massive market opportunity this division is addressing.
Absolutely. ReElement is a really unique company, a company that we built from the ground up utilizing innovative technology. So what we do within ReElement Technologies is we displace what is done in China today using harsh chemicals and a toxic process. We instead use a process called chromatographic separation, which we have taken from all the way from pilot scale or lab scale all the way up to commercial scale to refine both battery materials as well as magnet materials for the electrified economy. Think anything that goes into the wind turbines, to the batteries, to energy storage. And what we've done is we've developed this technology in an innovative way to compete not only on the environmental footprint, but also on cost. And so we're one of the only players in the U.S. that can produce rare earth oxides that go into the magnet industry for the military, for the Department of Defense, for drones, but also the battery materials, the high purity lithium, cobalt, manganese, and nickel that go into these batteries for the OEMs, military, and other applications for energy storage. What's unique about our technology is we can scale it rapidly. So we've announced our partnerships within Africa, where we're processing lithium ores. And we've also talked publicly about what we're doing on the magnet front. What we believe is beneficial to our investors is our ability to deploy our technology in the United States as well as throughout the world to supply this growth industry. If you look at the battery industry, it's growing to over $23 billion a year by 2030. The magnet industry alone, there's $3 billion of magnets that go to landfills every year that are just wasted today. Our technology stops that. Our technology enables us to recycle those all the way back to magnet-grade materials today and battery-grade materials today. Lithium, you read about it every day. You see the importance of it. Our military relies upon it, and we rely upon China to provide that. We need to stop that. We need to provide a real solution that can be implemented in the world, and we've done that through our team. We just recently announced our 425,000 square foot facility, 42-acre campus in Marion, Indiana. We're also working on a third location within the United States as we speak. We've announced our magnet partnerships with AML, Advanced Magnetic Labs, as well as USA Rare Earth. And then on the battery front, with American Lithium Energy, who's been working with the government and DOE contractors for many years. We're tying in the supply chain to solve the problem that exists today within the world. And we're going to continue to grow that with the ability to produce billions of dollars of revenue a year utilizing this technology that's been commercially utilized in other industries for many generations.
You've positioned the McCoy Elkhorn complex as a major growth driver for your American Carbon division, which received an unsolicited bid valuing its assets at up to $260 million in total enterprise value. Mark, what can you tell us about this high growth division of the company?
Yeah, the American Carbon division is one of the most streamlined platforms in the industry today from a met carbon for the steel industry production. We had a great offer that came in. It was an attractive valuation. There were some nuances within it that did not enable us to accept it. Now we've subsequently have had a few different offers come in on different platforms of the business, but we are looking to unlock this value. As we stated, we're spinning out the ReElement division, and now we're also entertaining spinning out the Carbon division to truly maximize the value for all of our investors to continue to scale both ReElement as well as American Carbon to supply the steel industry, which is, if you see infrastructure growth, you see the electrified economy growth, you need to redevelop a lot of that infrastructure, and that's going to take a lot of steel. And so we're going to be a major supplier of that for many years to come through the American Carbon division.
Let's look now at management. Of course, it is key to the success of smaller cap companies such as yours. Who are some of the key players on the American Resources team?
Yeah, so most of what you see in our team is unique in that we are the founders of the business. So we're also one of the largest equity owners, so we're aligned with our shareholders. Over the years, we've hired some really key personnel within the team. Jeff Peterson, our Chief Operating Officer, Bill Smith, who's Head of Engineering and Design on ReElement, Yi Ding, who developed our technology for battery and magnet recycling while at Purdue University. What's unique about that team? They're incentivized by equity. We're not hired guns. We're not looking at hiring people that care about just collecting big salaries and working minimal hours. We're hiring people that care passionately about the success of the business and the direction of where the business is going for the long term and preparing the business for that growth worldwide.
Mark, I'm going to put you on the spot here. Give us the essential value proposition. Why should investors take an interest in American Resources Corporation right now?
So American Resources Corporation is not being properly valued. We believe that the ReElement division being spun out will create a significant value driver for investors. So if you're invested in American Resources today, you will receive shares in ReElement post its spin out, which will happen in the near term. We're working with a large, one of the top investment banks in the country, if not the world, that is helping advise us on that process and helping us get through that process. But ultimately, that value proposition and the strategic committee that we established is to unlock that value in the near term for all of our investors. And not only will you get the benefit of the American Carbon growth, but you'll be an owner of the new company, ReElement Technologies, which is totally disrupting the electrified economy, the battery and magnet economy, as we are commercially scaling. We've innovated. We displaced what's done in China, not only here in the U.S., but also in Africa and also other locations that we're partnering with. And our investors will benefit from that growth. We're tackling a demand in the industry that is massive. And there's a huge runway for success in the battery and magnet industry. And we're one of the few players that have been able to take a technology all the way from lab scale to bench scale to pilot scale, now to commercial scale.
That is a very strong story, Mark. Thank you for telling it to us, and thanks for being with us.
Absolutely. Thanks for having me on.
Now, to get more information on American Resources Corp., visit arecinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com, featuring emerging growth companies like American Resources. Again, visit redchip.com and subscribe today. In addition to our newsletter, you can also order your copy of Small Stocks, Big Money. This is a book written by RedChip's CEO, featuring interviews with some of the biggest players in the microcap space. Order your copy at Amazon.com for just $18. Next up is Graphex Group Limited, stock symbol GRFX on the New York Stock Exchange American. Graphex is a global leader in midstream processing of specialized natural graphite used for electric vehicle lithium-ion batteries. We'll learn about their strategy to expand operations in support of energy transition and electrification efforts worldwide. Now let's move on to our next interview today with Graphex Group Limited.
We're here today with John DeMaio on Cinco de Mayo, president of Graphex Group Limited. John, welcome to the show today.
Todd, great to be with you. Thanks for having me.
It's a pleasure. And first off, I'd really like to congratulate you and your team at Graphex on rising to be a top 10 global producer of graphite anodes for EV and other high-capacity batteries.
Yeah, thank you. Appreciate that.
To bring our audience up to speed, why don't you tell us a little bit about the importance of your proprietary technology and how it adds value to the graphite industry, helps the world electrify this big goal. It's a pretty lofty goal of rapid EV electrification and conversion. Tell us a little bit about that in the background, please.
Sure. I think first it starts with an explanation of graphite and the role it plays in the electrification ecosystem. So much of the focus is on batteries, of course. That is the heart and soul of electric vehicles, battery energy storage, et cetera. And batteries contain a significant amount of graphite. It doesn't get the notoriety, if you will, of, say, lithium or manganese, cobalt, et cetera, nickel. But graphite makes up at least 25 to 28% of the volume of a battery. So there could be 15 times more graphite in a battery than lithium, right? And as it stands now, there is a plethora of graphite in existence, if you will, on the planet, but not much of it is being mined. And that's a historic kind of a situation. So what you have now is a mismatch between the supply of graphite, particularly refined graphite, which is what we do, and I'll get to that in a second, and the demand as projected by this electric vehicle proliferation and the push for battery energy storage. So where we excel is in the refining of graphite from its raw material stage to its finished product stage to be used as anode material. And by the virtue of the fact that we've been commercially producing this at scale for over 10 years, we have a high yield production platform. We're experienced at what we do, and that gives us, I'll say, an advantage in the sense that we can produce anode finished material from a variety of sources, and we're ready to plug and play when we talk about domestication efforts in North America and beyond.
Amazing. It's an exciting time for you guys in this whole move and trend. We've seen explosive growth from Tesla and some of the other EV companies coming into their own. But right now, I'm really even more excited about Graphex' decision to establish a facility in Warren, Michigan. Even more that it's an auto parts facility that provided jobs in the Big Three region and now is shut down. How can it help gigafactories reach their goals in the U.S. to have some stable domestic supply of EV batteries?
Yeah, for sure. So, with respect to the Warren, Michigan plant, we announced that in early 22, and that was somewhat ahead of the real focus on domestication efforts. It was before the IRA, for example, before the bipartisan infrastructure law. And that was just a business decision that we made that, again, we have the experience, we have the know-how that was, as I say, born and raised in the Asian ecosystem, which is, let's face it, 15 to 20 years ahead of the rest of the world, with the exception maybe of Tesla. So we felt that we had something to bring to the table to support this electrification movement. Yes, it's a good business decision, but moreover, we want to be a foundational player in this electrification movement. I personally have been part of this energy transition long before it was called that. So it's really satisfying for me to be part of this and to see the momentum moving in that direction. So when we decided to make a plant the flag, so to speak, in North America, we had a blank page, and we considered a lot of different areas. I'm sure you're aware that there's a lot of activity in EVs in the southeast and in the middle of the country, in Kentucky, for example, et cetera. We wanted to look at Michigan because of its historic place in the automotive industry. And we found a location in Warren that, as you mentioned, it was previously an auto support facility. I think it did some kind of undercoating, but it had been dormant for a couple of decades, and some local developers had purchased the property and were starting to renovate it. The fact that it's in Warren, where GM has headquarters, where the city and the folks in Warren have seen an exodus of automotive technology, we felt that we could do well and do good by announcing and building a plant there, bring jobs back, and very importantly, bring technology, which is really a new technology, back into Michigan.
To your knowledge, is there any current domestic or U.S. production or North American production of these graphite anodes?
There's not any production at commercial scale at this point, right? So, yes, I mean, when you look at the landscape of gigafactories that have been announced, it equates to almost anywhere from 400,000 to 500,000 tons of graphite being needed for the anode side. And like I said, commercial scale production is at zero. Sierra Resources has a pilot plant, and they're looking to expand. They've had announcements, and I think they're on their way to producing, I think it's 11,000 tons and then 45 over the next few years. But when you put that against a backdrop of 400,000 to 500,000 tons, there's obviously room for expansion. And again, we feel that our over a decade of experience allows us to quickly plug and play into that ecosystem and take advantage of the opportunity to bring jobs into potentially disadvantaged areas like Warren. And again, like I said, do well by doing good.
No, that's really, I'm sure the community is appreciative of this effort. And speaking to some of the incentives, how can the Inflation Reduction Act affect your business model now and plans to shore up this domestic supply?
Yeah, well, first and foremost, it really is by design motivational to domesticate supply chain, right? Like any legislation, it may be imperfect. Some of the timelines may be overly aggressive, and I think you'll hear that from throughout the industry. But by and large, it's moving in the right direction, and it has a lot of buy-in from both sides of the aisle, from industry, and pretty much by the consumer themselves, which is obviously the driver of this. So those incentives more or less require the supply chain to be domesticated. And again, we feel like we fit right into that in the sense that we are ready, I hate to use the expression again, but to plug and play, right? We have proven technologies, proven procedures. We have a very strong technical bench. So we're ready to bring that expertise to bear. It's not, we're not a startup, and we're not introducing new technology. So we're a relatively low risk kind of a play when you think about how do you do two Herculean tasks: electrify mobility after 100 plus years of internal combustion, at the same time domesticate the supply chain. Well, we feel one of the best ways to do that is to get experienced players that are in that supply chain with experience in it to come and build out that infrastructure.
Yeah, and you guys have established quite a bit. You've got 15,000 tons. You're trying to get that capacity up to 45,000 in some of your current facilities, approximately $50 million in trailing 12 revenue. To me, you have a very compelling market cap, a real cheap valuation at this moment, trading less than 1 times sales. So what steps are you guys now taking to create shareholder value and have a strong finish to 2023?
Yeah, that's a great question. So yeah, we do feel like we're a diamond in the rough, much like graphite itself, kind of the unsung hero of the, maybe not a hero, but the unsung, component of the battery chemistry. We've spent the last 12 to 18 months really laying the foundation, really taking the pulse of the industry, navigating some of this new legislation, right, to really understand where we can add value, where we can expedite, our value creation, not just from shareholder perspective, but really importantly to the industry itself. So we're in multiple, not only discussions, but different levels of negotiation, we'll call it, with the OEMs and battery makers on the downstream side. We're also paying a lot of attention to the upstream side. I mentioned at the top that there's plenty of graphite in the ground, not a lot of it is available. So when you couple that with the real push for domestication, or at least nearshoring or friendshoring, what we're doing on the upstream side is aligning ourselves with mining operations that are either currently producing or close to producing, that are located in countries that are friendly, either part of the free trade agreement or not countries of concern as laid out by legislation. By doing that, what our goal is and what we know is the right solution to the industry is to provide end-to-end, as we call it, mine to anode solution at scale for the consumers, for the, in our case, the automakers and battery makers. What they're looking for is volume and quality production, and we represent that midstream. Now what we're doing is bolting on the upstream so that, again, it's a end-to-end solution. We want to be the easy button for graphite anode material.
Wow. Yeah, I mean, sounds like you're growing a pretty substantial pipeline. Maybe to our audience who's not so familiar with the economics, how do you bring value to a mining company or an automotive industry partner and help them create value at the end goal?
You bet. That's a really great question, because in the graphite realm, a little bit different than some of the other, more marquee metals, we'll say, where a lot of that value for, say, lithium is in the extraction process, right? In graphite, the significant part of the value, not just commercial value, but also performance value, is achieved in the midstream, exactly where we play, right? So in dollar terms, if we acquire, raw materials from mining operations and at a value of X, by the time we're done and produce the anode material, it could be worth 10 to 15X, right? So there's a tremendous amount of value created in that midstream. When you look at the landscape again, mining graphite has not typically been uber profitable, right? And that's why there's not a lot of active mines. More are coming online, unlike mining for gold or lithium or other precious metals. So some of the mining operations are interested in coming into the midstream to access that value creation. Some of them are trying to do it themselves, right? Others are recognizing that, it might be a better play to stick to our respective knitting, right? And have them do the mining, take on, that's a handful, as you know, between regulatory, permitting, et cetera, and operational, and leave the midstream to companies like ours, but work out some kind of a financial arrangement where they can participate in that value creation. So we're leveraging our expertise and that value creation to secure some of these relationships with upstream providers. And when it comes to the downstream providers, again, it's our experience that they really value. We're pretty much a known quantity. We've been at this for 10 years. That makes us, one of the original players, basically. So that holds a lot of value for OEMs and battery makers that really need stability in the delivery, not only of volume, but of quality. And that's what you get after you've been doing this for 10 years.
Yeah, I can only imagine these win-win types of relationships are key to the success and the growth of these industries, bringing all parts, having the resources in North America. Thank you for sharing this story with us today. I really I'm excited to see your year unfold here and see another factory come online in the U.S.
You bet. I like to say, Todd, that electrification is inevitable. Electrification needs batteries. Batteries need graphite. And when you think of graphite, think of GRFX.
Now, to get more information on Graphex Group Limited, visit grfxinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com, featuring emerging growth companies like Graphex Group Limited. In addition to our newsletter, you can also order your copy of Small Stocks, Big Money. This is a book written by RedChip CEO, featuring interviews with some of the biggest players in the microcap space. Order your copy at Amazon.com today for just $18. In closing, remember, while small caps can provide significant gains, you must be prepared for the downside. Small cap stocks are among the most volatile asset class. Some of the companies featured on this show are RedChip client companies, and we may own stock in these companies. So please always read our disclosures at redchip.com. Thanks for being with us today. We'll see you next week with some new exciting emerging growth companies.